Welcome to another awesome episode of Your Extraordinary Growth. I am Michael Baczynski, and today I have the pleasure of speaking with Peter Yu, a certified public accountant with over 20 years of accounting experience. Peter has been an auditor with a national public accounting firm, as well as a professional consultant in the private sector. Peter has an extensive experience providing CFO, controllership, and treasury functions to publicly traded and middle market companies, while also acting as an integral liaison between management executives and external auditors. Welcome to the show, Peter.
Thank you for having me.
Oh man, I appreciate you taking the time. So you've been in business for 20 years. So 20 years ago, you were working as an auditor and a couple other things as we discussed there. And then all of a sudden you decided I should own my own firm. Tell us a little bit about what that experience was and what drove you to start your own business.
Sounds good. So I was an auditor for a national firm called Grant Thornton, and I was burnt out and didn't want to do accounting anymore because all the travels and affected your personal life. And so one day I gave my resignation and I walked out cold turkey.
Oh,
Uh,
wow.
yeah. I'm like, you know what? I'm gonna go do law. So
You're going to go do law?
yeah, corporate law.
Oh, wow. That's a big switch.
Yeah, so I always liked law a lot. So I signed up for the LSAT, had a tutor, and I'm like, you know what? I'm going to join this university that has the credentials to get my law degree. And then out of the blue, one of my former clients calls me and says, listen, we hired a new controller and he was not working out. We are publicly traded. You were my auditor and you did everything from soup to nuts, so how about you come in and help us out since you don't have a job right now? I'm like, so this is basically like a consultant, right? He's like, yeah, absolutely. Maybe 2 days a week and, we'll pay you a lump sum amount of money. I'm like, this sounds good, And I'm like, maybe I could do this and go to law school too and have income coming in. That being said, I started doing outsourced controllership services. So one client, two clients, three clients, and that's kind of, so I hired other consultants to help me. I never really hired employee because it was very at a higher level. And the intricacies of, managing people, I didn't have that real experience for your own employees at that point. But that being said, 20 years later, we're over 30 employees now, still providing outsourced controllership CFO services. We also provide bookkeeping tax services. And also we are a software implementer for accounting software. So we partnered with a company called Sage Intact and Bill.com. And then what we do is we implement the software and then we are users of the product too. So especially for companies that have grown out of QuickBooks. Um, um, Providing the outsourced controllership CFO services, what we've noticed is that we've helped company grow. My last project was a company was started in 2012. They were educational company in Miami, and they decided that they wanted to buy Montessori and BPK schools. 2017, they sold the company for $175 million.
Nice.
I built the entire accounting department for them. We ran the entire back office accounting for them. Was part of the due diligence process and, got them through several audits. Needless to say, 2 years later, 2019, that same private equity group that I was dealing with, they came to me and said, we're going to buy dental practices. And we want you to build our accounting department and run the whole gambit, whole show. So I said, okay. So my one question was, how many do you guys plan to buy? So they said within 5 years, maybe about 150 practices. I'm like, wow, yeah, that is going to take yeah, a lot
That's
of
an
work.
army. Yeah, that's
Yeah,
an army.
that's so they started out with 6 in Philadelphia in 2019, then 4 in Michigan, 5 in Texas, 9 in Virginia. That was in 2019.
Wow.
Today they are over 165 practice.
Jeez Louise.
I got them through 4 audits, and they're valued close to about $1 billion at this point,
That is amazing.
and still providing them accounting services. So,
That is amazing.
so yeah,
So you're, I mean, 20 years in business, I start seeing people looking at their exit strategy. I mean, you've seen somebody with an exit. You have obviously helped people with their accounting through massive growth. Um, but what does the future hold for you in the next 10 years as you're approaching this 30-year mark, which is remarkable for most businesses?
so yeah, I've in the past 10 years, I've learned a lot through these private equity groups and how they grow their business, mainly through acquisition. Um, so I would my next 5 year goal is to grow CPA by choice through acquisitions. Uh, Obviously, we have the organic growth at this point, but also through acquisitions because it's, I would say, if you have the knowledge to accumulate a larger group of practices, your value overall for the company goes up automatically. Especially in our industry, the if you had to go and sell a practice that's about $1 million, you may just get $1 million. You
Right.
know, um, whereas when you get a larger group of practice, then the multiples are different.
Oh yeah.
So
That's amazing. We in the marketing world, it's this a lot of the same, right? Like if you have $1 million company, maybe get 1.5 EBITDA,
mm,
times on EBITDA. But you have a $2 million company, all of a sudden you get 2 to 3. You get a $5 million. Now you're looking at 3 to 4. You get 10 million. You can get like a 4 to 6, depending on how you have it set up. Your MRR and all the other stuff that goes along with it. So it's like the higher or the bigger your revenue number is, with all things being equal as far as profitability, sustainability, your sales process, all the other stuff that looks transferable. Because I think that's a lot of what a lot of people forget is like they go, yeah, I have a $1 million accounting firm. Yeah, it's great. How's your sales? What are your sales from? Where do you get all your sales? Oh, I network. Okay, great. So if we take you out of the equation, what do your sales look like? Oh, well, somebody else have to do that. Okay, what's your
so
process? Oh, I don't have that.
absolutely, absolutely, and no, I agree. And majority of my growth has been organic and through my network, with the people that I know for over 20 years. And yeah, my referral sources are other CPA firms that don't do what we do. I have a large national CPA firm that refers us clients that we assist them with. I have clients that are almost been with us for over a decade, because they like the service that we provide, and they like the stability, of hiring, firing people, and the controllers leaving, or with us, there's that static service, and also we bring a world of knowledge too, because um, we're just not accountants. uh,
Hmm.
we know the operational side of things, and then we
Hmm.
know the accounting side of things, and then also if a client needs any type of assistance in regards to tax planning, or internal operational growth, we can reach out to our network and say, does anybody know somebody that can provide these services? And then, and then we relay that knowledge to them so that they can make that necessary decision.
Mm-hmm. Mm-hmm. Yeah, it's amazing. I've worked with a few fractional CFOs over the last few years, and it's been just amazing how much involvement accounting. So many people think about accounting as this passive counting thing, right? Like, oh, we look at everything in the rears, really. And it's like, well, no, if you're a very fast growing, aggressively scaling service-based business, no, you need a CFO to show you what's ahead of you and show risk and all the other things that go along with what a CFO does. And so, yeah, it's amazing how few people even realize how powerful their accounting department can be,
Oh,
especially when you get into the multi-million-dollar realm.
absolutely, absolutely. And dental practices are great because, I've been servicing them for a while now, and majority of these practitioners are very focused just on the operation of the business. And
Mm-hmm.
the accounting is all done on a cash basis. So they really don't know month to month what they're truly making.
Mm-hmm.
All they see is what's money coming into the bank. One day you tell them, well, you know what, you actually are worth more than what your your books are saying, because you're maintaining your books on a cash basis,
Right.
right? And you have all these flow through of your personal expenses, which are truly not part of the business, right? So when
Mm-hmm.
a PE group or a dental service organization
Mm-hmm.
wants to come and buy you,
Mm-hmm.
certain multiples of EBITDA.
Mm-hmm.
But what you need to do is take all that one-time cost expenses that really don't belong to the dental practice, should be below the EBITDA line. So then you
Mm-hmm.
get a higher multiple, right? So
Mm-hmm.
all those things that a dental practice doesn't really know, practitioner really doesn't know,
Mm-hmm.
because you're leaving money on the table,
Oh yeah.
right?
Ad backs are a huge thing. I think that people don't realize that those can over time. And then in a dental practice where your average family is going to be with you for 8 years, that's a big deal too, right? Like
Absolutely. You can always
and
value to it, right?
right.
Yeah, and especially in this day and age, the multiples I've seen of EBITDA is six, I've seen up to 10 times.
Yeah,
You know,
right. Which is
so
basically paying for the future value of the current book.
correct, correct. But you got to maintain the books correctly, right?
Uh-huh. Oh yeah, there we
You know
go.
what I mean?
Yeah, people
So
with bad books do not get the right multiples for sure,
yeah,
and they need people
exactly,
like
exactly.
you to make sure that's there. And I think that there's a book out there, I can't remember who wrote it, but it's Build to Sell, and literally, his whole thing is about like you from day one build your business to sell it. And if you do that from day one, when you do get ready or get blindsided by an offer for acquisition, when you're midway through what you think is your journey, you're ready. Doesn't matter. Your SOPs are in place. Your sales process is in place. Your marketing is transferable to somebody else. Your books are clean and somebody can find and can see everything that's going on in your business without having to ask anybody because you've had somebody maintaining them and doing all the things. Your operations are there. Your HR is in place. Dot 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 dot. Right.
Oh,
That right there is huge. I mean, that can equal a whole one multiple in your EBITDA, adding to your EBITDA. I think because they're going to look at anybody acquiring you is looking at you saying, "How hard is it for me to take you over?"
yeah,
And so many people, it's like, well, if the owner is the business, it's not as attractive.
correct, correct.
Right.
No, absolutely, absolutely. And how does the business operate without the owner, right?
Right. Exactly. Have you ever read Mike McAllowit's Clockwork?
No.
Oh, that's a good book. So that right there, I recommend it to
Yeah,
all my business owners, clients, because it literally gets you out of your business. So basically, you work yourself out of a job. So you own a business, and you can sell a business. You can't sell your job,
correct.
right?
I,
So,
I I definitely agree because the way I see things is that if you are doing all the nitty gritty stuff, then you're just a mom and pop,
Mm-hmm.
right? If you want to run a true business, you have to have people run the show for you,
Exactly.
right?
You got to
With
own a business, not a job, right?
correct.
Right. And
And
I
and
remember,
most people that we deal with, they think that they are owners of a job, but I'm like, without you, the company doesn't exist.
and you own a job.
Yeah.
I was there for 13 years. I owned a job of CEO, and it's funny because when I reorganized my company about 4 years ago, that was the whole point of it, was that I needed to get out of that. I needed to get out of being a CEO. And so I started calling my title was president, and people are like, well, isn't a president lower than a CEO? I said, I really don't care. I just don't want to be called the CEO anymore. It's like, I got PTSD from being CEO. I want to be owner. That's what I want to be. Right. I want to be visionary.
No, I agree. And during my starting days too, I was doing majority of everything,
Right.
right? And then my wife, you would tell me, it's like, if you're owner of a company, you gotta just let go.
I think that's the hardest thing, and it's sometimes it's ego, sometimes it's fear. I think other times they just don't know that they have permission to let go, right? That
I
imposter
agree.
syndrome that, like, well, if I'm not working 10 hours a day, why would anybody work 8 hours a day?
Yeah,
Right? And it's like, well, no, I mean, you pay them to work 8 hours a day and they pay them to do a job. That's the exchange there. And
correct.
it's amazing that how long it takes us to realize that. And even when you have multiple businesses, I mean, I've started 3 or 4 businesses, and some of them failed miserably, because, I didn't have the bandwidth to put in that first year to really get it running, because I think that that's another thing that other younger entrepreneurs are starting to do, is they try to let go too early,
Mhm.
right? And they go, oh yeah, well, I've got it, I'm up to $20,000 in revenue a month, and I only need 6,000 of it, so I can spend the rest on other people doing my work, and I don't have to check it, I don't have to hold anybody accountable, I don't have to audit anything, dot dot dot. And it's just like, whoa, wait a minute, you're still an infant.
Yep. No, I agree. Totally. It's a different generation too.
Oh yeah. And I think doctors, though, I mean, like when you're talking about dentists, they went to school to become a practitioner, not a business owner,
Correct.
right? And not all of them have own their own practices. I have some clients that are just like, you have the main dentist who, like, basically is bringing on partners, but they're the business person. And these people here, the other people, I mean, almost like residents, if I don't know what the word would be, but they're partners in that they revenue share, they buy into. But when it comes to the final vote, who has the most votes? The person who started it,
Oh
right?
yeah. No, absolutely. So uh, there, that's why I previously mentioned about DSOs, which is dental service organizations. So that you have these PE groups that want to buy these dental practices,
Hmm.
right? But they're not doctors, so they
Hmm.
can't own them. So they create these management company called DSOs.
Mm.
And what they do is they have a management agreement with the practicing company where entire revenues and expenses will just flow through into the DSL. And that's
Mm.
how they acquire those practices, right? But what they do too is that when they acquire practices, they don't acquire 100%. They create a separate joint venture
Mm.
where you have these doctors participate, even though
Mm.
they sold their practice, but they still own a minority share
Mm.
in the practice. So they still have skin in the game.
Gotcha.
And then they get a second bite of the apple because once they've sold it once, and then
Hmm.
the PE group, once they accumulate enough practices, value the company and then resell it. So then those doctors get a second bite of the apple.
Nice.
There's an incentive for them to stick around, right?
Yeah,
So
and keep it growing, right? Keep
yes.
it growing, because then it's more appetizing as a portfolio, is what you're to
Correct.
basically creating a portfolio there. So if you had to If you had the opportunity to talk to your prior self 10 years ago, knowing what you know today, what would you tell that self?
Good question. Not to regret being a CPA, because there were times when I gave up. I didn't want to do accounting anymore. And then I
Mm.
got in love with it after I started doing the controllership services. And that's why the name CPA by choice.
Very, very cool. Good insight. I love that. I, I, I'm actually, I connect with what you just said, because there was a time where I didn't think I wanted to do marketing anymore. And I owned my own marketing firm at the time. It was a creative agency. And I'm like, I don't want to do this anymore. But then when I went back and looked at it, and my now wife at the time, just a partner, she, looked at me and I said, oh, I'm just going to go become a CMO. Right. I didn't want to be my own marketer. I was just going to just do a chief marketing officer job, get paid a couple $100,000 at a medium sized business, and, just chill. Right. And then like 2 weeks into it, I'd written my resume and all the other things. And she goes, you're not gonna be able to do that. You know that, right? And she basically had to show me how much I loved what I did. Right. And today, yesterday I was talking in a mastermind, and people are like, marketing's hard and marketing is highly competitive and I said, guys, if I didn't love marketing so much, I wouldn't do it. Like, it is not a sexy business to own nowadays, right?
Accounting too, right?
But 17 years in, I'm like, I don't know what else I would do, because I do love it that much. And so I really appreciate you sharing that insight, because I love that, like, that you even put that into the name of your business. I love that. And I really do appreciate your time today. We're going to share your website in the show notes here, so that people, if they want to check you out, they learn more about you. All your contact information will be there. And for all of our listeners today, if you enjoyed our conversation with Peter, please go ahead and subscribe to the show. Give us a rating so other people know how much you enjoyed it. And until next time, stay extraordinary.